Good morning, it's Harvey Jackson. Just going to get through the Middle East crude oil rally that we're seeing that's taking all commodities up with it. I shouldn't say all, but most of the commodities that matter to us, and of course, fuel prices as well, going against us if we haven't got our fuel supplies. Iran defies Trump and appoints the son of the supreme leader as the successor, and I just saw a note there that Putin is congratulating that move as well. So you got some of these moves that are going against maybe what Trump would like here, but government scrambled to limit the fallout of Iran war as well. Prices surge. So oil prices 25% increase. Producers cut output. Iran taps new leader. South Korea caps fuel price for the first time in 30 years. G7 ministers are meeting and discussing. Japan weighs on reserve release. No decision yet. Vietnam cuts fuel imports. It's just all around scramble to try to secure energy, especially if you're dependent in that area, because it's not just Iran, it's the whole pinch point at the Strait of Hormuz, right? China makes its biggest retail fuel cap. So it kind of explains it right here in this area here that China allows retail gasoline and diesel prices to float freely between floors and ceilings. So anything over 130 per barrel, it's going to be capped, and anything below 40, sets at $40 a barrel. You can see here just how possibly how many ships are kind of just they're staying way back and way back here as well. So it's not just in the strait; it's beyond there too. So you can see how many ships are just kind of sitting and congregating there or trying to get out of fire. G7 discussed joint release of emergency oil reserves. Oil soars 20% higher. Gold drops as Iran war jolts global commodity markets. Crude oil, Brent, went as high as $119 a barrel, and so did the West Texas. But you're getting some benefits on the agricultural products. There was even an article that I saw that palm oil rose 9%, but it's also Indonesia is talking about reenacting their just kind of put aside B50, so the 50% of palm oil inclusion in their fuel needs for diesel. That would create the internal demand of using the oil. So here's another just headline. Canada calls discussions on U.S. MCA constructive. So there was some talks introducing the new negotiator and back and forth here. So hopefully that does play out here. Just money managers are going along. It's no surprise, even though this is dated information. You get it on Friday. It's the previous Tuesday to Tuesday, so it's not even that accurate. The markets have rallied beyond that and probably got in even deeper on the overall positions here. Canola. Currently, as of Friday, we're at 7.2 million metric tons crushed, so we're on pace to probably get to that 12 to 12 and a half. 12.6 is what I have on mine, but we're on a slower pace of exports versus last year. Now, normal, whatever, but let's say we get to 7 to 7.5 exports. It's still going to create a bottleneck of product left in the country here, but if we can keep our demand up here, that'd be great. So some storms and some more precipitation is going to be hitting that area. You can see the snow bands that are currently skirting the 49th parallel on the prairies. Cold to the north, and basically just obviously a jet stream is running right in on the 49th parallel. This is just the accumulated precipitation, so that drought area that was highlighted last week is probably dried up some. You can see that there is some moisture on all of these weather models in South America. So just a quick look at the market. Canola up 1360 at 744 on May. Rapeseed is up 1150. Soybean oil up 1 cent, 67 or 1.67 cents at 68.25. Palm oil is up 203 ringgits. Crude oil is up $9.57 when I took the snapshot here, so it's only at $97, not over the 100 at this current venture. 360 a gallon, up 30 cents on the diesel fuel. Soybeans at 12.17, so up 16 and 3/4 cents. And your spring wheat is up 6 to 7 cents, and your Kansas is up 26 and quarter cents, and the Chicago wheat is only up 5 and 3/4 cents. Corn up 8.5, and the Canadian dollar is up 23 points. ticks. So here's the 1 day chart. I've been looking at the minute charts and everything else, but this is what the 1 day chart is kind of showing us here. We've made it to the full retracement value that's back here, somewhat here as well. So that's extraordinary and great at the same time. Still want to be long, don't really want to be short until the market actually kind of breaks this trend line or this trend line. So we've got a very steep rise in this market. So I'm also looking for this to actually, these lines to break this here for a strong signal to be short there as well. So European rapeseed gapped higher and gapped higher than its values back there. The rapeseed versus Canadian prices, it's only $72 price differential between European rapeseed and Canadian canola priced in Canadian dollars. This is just an illustration of what has actually taken off the most. So diesel fuel, since this is January 1, and diesel fuel futures have risen 78%. Crude oil is up 72%. Soybean oil is at 32%. Canola is at 21, and your soybeans have rallied 15. So when you look at the charts, when you're taking this slice, it looks a lot different. But that's just give you an idea how this market was still going up all the way through there, and now it's actually taking a pretty good run. Soybean oil futures gapped, and pretty steep increase there too. Soybeans gapped higher as well. We'll see how this is going to trade through that length. Of course, you've had some wide trading ranges there too. Palm oil beating these highs, but I wouldn't doubt it will trade right on that line for somewhere at the end of the day here. It did get to $118 a barrel, as I cited there earlier, but it's pulled back quite a ways here. Here's your diesel futures. Canadian dollar looks like it's getting support in this upward trend. I do not know if it's going to rally past that. So Canadian dollar is getting supported by the fuel. Would be nice to be able to have a little bit more exports, as that's being called out, I think, every day. Taiwan wants it. Germany wants it. They want our fuel versus the Middle East. U.S. dollar index increasing over the 200-day moving average. Volatility index, nice or big jump there too. So at some point, if we get into these ranges here on the S&P, you should be looking at shorting that as well. Gold, nice run. Silver, still supported there as well. So a quick look at wheat, long candle, but it's currently off some of the length, but still very green. But we're getting very close to this upside target that I had for futures first contracts for spring wheat, but I wouldn't be doing a whole lot there. We'll have to see how this war rally continues here. Kansas, same kind of length, long wick to that candle as well. Chicago. And your French milling wheat above the 200-day move average for the last couple of days. Upside target potential for corn. It might seem like a dream, but it is values that we had back here, and that war rally could potentially get us into that $5 mark. That's all I have for you today.